Well, hello and welcome back to Principles of Accounting 2. Still your host, Dr. B. Happy to have all of you with us today as we talk about process costing. Before we jump into the conversation, I want to kind of bring you back to last week. And the reason why I want to do that is because I want you to think about what we talked about last week when we talked about job order costing. As I had mentioned last week, job order costing is when we focus on the individual customer's order. And in that process, we are adding in direct materials, direct labor, factory overhead for each job, each customer order. That's job order costing. That's what we talked about last week. The reason why it's important to recall that is because I had mentioned last week that process order costing involves a continuous process. Okay, that's why we call it process costing. It's a continuous process. Yeah. So I just want you to keep in mind what we talked about last week with job order costing as we move into process costing, because they are somewhat related in that regard. The difference, of course, with job order costing, we focus on the customer's individualized order, and process costing, we focus on the continuous process, regardless of a customer's order. Okay, so that's what I want you to keep in mind through today's conversation. Before we jump into the lecture PowerPoint presentation, I want to bring you to the classroom. Uh, Once again, you're all doing wonderful work, so I sincerely appreciate that. You're all very much on top of the game. You did very well with the activities from last week, so thank you for that. We are in week 5 now. There are a couple of things going on this week. So this week we have a hypothesis on process costing, one original and one response, just like the one from week 3, I think that was. And then we'll also have the quiz related to this discussion on process costing. So those are your 2 action items for this week. I would like you to use the class time on Wednesday to complete those 2 things. I think you'll have ample opportunity. You'll have enough time to do so. So please use the class time on Wednesday to take care of the hypothesis for this week and the quiz. And of course, if you have questions about those things, just let me know. I'm happy to help you out whenever I can. So without further ado, let's jump into the conversation on process costing, and we will talk about how it all works. So last week we talked about job order costing. This week we're talking about process costing. And as I mentioned, it's important for you to remember what job order costing was as it relates to or contrasts with job order costing. And so let's look at what we talked about last week. We talked about job order costing, which was the focus of on individual customers' orders, right? That was job order costing. Process costing, as I had mentioned last week, is a process where we identify costs on a continuous basis, regardless of the customer's order. Process costing is used in particular companies that focus on manufacturing the same or similar products at a very high volume. What I mean by that is they continuously make the same thing over and over again. For example, General Mills focuses on making cereal. Primarily, they focus on making corn-based flake cereal. Very similar product over and over and over again. They make millions of boxes of this stuff a year. Another example would be Pepsi or Coca-Cola. Those two companies focus a lot of their effort on making soft drinks like a soda. Yep. And it's the same product over and over and over again. They make millions, if not billions, of bottles of soda every year. And they're all the same. They're all the same. Yeah, of course, there's a couple product lines, different flavor profiles, but they all have the same concept. They all have the same base, also same type of syrup. Hershey focuses on making chocolate. Suja focuses on making orange juice. One of my favorite concepts is a bottle of water. Pepsi makes bottled water. As I'm sure you're probably familiar with their brands of water. So does Coca-Cola. They also make bottles of water. You'll notice that every time you go to a grocery store, you go to Costco or to Sam's Club or one of those big box stores, they have pallets on pallets on pallets of water. The same, and it's the same. It's the same exact product, same exact amount of ounces, in the same packaging. It is the same. It is what we call highly standardized. Okay, one bottle of water is not going to be different than another bottle of water in that package. They're all the same. They make these on a continuous flow, meaning there's a kind of like an assembly line. It starts out with an empty shell, the bottle, right? And it moves down the assembly line, and there's a machine that fills it with water to the exact specification, and it fills hundreds of thousands of them per minute to the same exact level. And then it moves further down the line. There's a cap that gets put on it, hundreds of thousands of caps per minute. And then it moves a little further down, and a label gets put on it. It's continuous. You see, the process does not stop. And it just happens over and over and over again. It's what we call a continuous process. And the reason I want you to think about that type of process is because at every area where that bottle of water moves through, there's additional cost being added to it, right? Like, for example, we start with the empty bottle itself, which probably costs maybe 1 penny or 2 pennies. And then it moves a little bit further down that we add the water, which costs maybe another penny or two. So now we're up to 4 cents. And then it moves further down. We put the cap on it. Add another penny, that's 5 cents. Moves further down, we put the label on. That's another penny, that's 6 cents. And then it moves to the packaging department, gets put into a pallet, and sent out to the grocery store. All in all, you're looking at maybe 10 cents. Because we added in some factory overhead and maybe a little bit of labor. 10 cents to make a bottle of water. That's probably accurate. It's probably accurate. You pay, what, $1 for it at the grocery store? Yeah, that's probably accurate. But think about that continuous flow. Think about how that works. Here we have an example. Making chocolate. Oh, one of my favorite things. I love chocolate so much. Don't you? Who doesn't love chocolate? Okay, I want you to think about this. Think about how chocolate starts. Most people think that it grows in the ground. No, not really. Oh, it grows in a bush. No, not really. For those of you who know, the chocolate bean is not a bean at all. It actually starts as a fruit, right? And it's within that fruit, the cocoa fruit. Inside there, there's many small beans. Usually, each one has about five, and it goes through a process. They extract the beans from the fruit to create chocolate. Okay, each process is identified as a separate production department. So as the fruit is starts at raw materials, the beans are extracted, and it moves into what we call the roasting department. And in the roasting department, we're adding in some direct labor, and we're adding in some factory overhead, and we're adding in some additional materials, right? And then when the roasting is complete, the cocoa beans move into what we call the blending department. This is where there's more direct materials, direct labor, factory overhead added in to the process. Maybe they're adding in some syrup for the taste, some milk, right? Some additional components to make it chocolate. Once all of that's done, and it goes through maybe another department or two, it moves into what we call finished goods inventory, which means it's available and ready for sale. The reason why this is a process is because we're making millions of chocolate bars every single day. Okay, and it goes through the same exact process over and over and over again, regardless of the customer's order. So instead of tracking costs by customer order, like we did last week in job order costing, remember we were building cars and Toyota was building the cars and we traced direct materials plus direct labor plus factory overhead to each job, right? Instead of doing it that way, in process costing, because we're making the same exact product over and over and over again, we're adding in that direct materials, direct labor, and factory overhead to each department as we are processing the product from raw materials to finished goods. You see, that's why we call it process costing. So these two diagrams help you to compare the job order costing to the process costing, which is what we're talking about today. Now, there's a couple of different methods that we apply to process costing. And one of those methods is called weighted average. The idea behind weighted average is that we are taking uh, the average, right? The average. So, weighted average. Last class, back in Principles of Accounting 1, you learned about a couple of different methods for calculating inventory. Remember? There was the straight line method. I'm sorry, I'm sorry, I'm thinking of depreciation. For inventory, you have first in, first out, last in, first out, and average cost, also known as weighted average. So first in, first out, last in, first out, and average cost. That's how we calculated inventory back in Principles of Accounting 1. Now, here we are in Principles of Accounting 2, and as you know, that process is pretty different. Yep. So, but I want you to keep that part in mind, the weighted average, when we did inventory calculation back in Principles of Accounting 1. So there's 4 steps when it comes to using the weighted average method. First step, of course, is to determine the physical flow of units. Now, since we're talking about process costing, right? Since we're talking about process costing, think about that physical flow that we just talked about with the chocolate example or the bottle of water example. It starts as raw materials, it moves into work in process in the first department, the roasting department, and then it goes into the mixing department, and then it eventually moves its way into finished goods. For a bottle of water, it starts as raw materials, the empty bottle. It goes down the line, it goes to the filling department to fill the bottle of water. Then it moves into the capping department to put the cap on. Then it moves into the labeling department to put the label on. And then it goes into finished goods, right? Follow the physical flow of the product. That will help you to determine the weighted average cost. The second step is to compute the equivalent units of production. An equivalent unit of production involves understanding the cost of producing a single unit at each department. Okay, I'll break that down for you a little bit further here in a little bit, but I just want you to understand what equivalent units of production is. This part of today's conversation is probably going to be the most difficult part of the conversation. Okay, equivalent units of production. Most students have difficulty calculating equivalent units of production, but the great news is you have me to help you walk you through it. Okay, so I'm going to do my absolute best to make sure I'm clear and precise. So if you have questions about equivalent units of production as we're talking through it, just let me know. Okay, I'll help you out. The third step to calculating the weighted average is to compute the cost per equivalent unit of production. Now you can already see why equivalent units of production is a challenge for most students in this discussion, okay, because there's really 2 components to it. So we're going to be really careful, and I'm going to walk very slowly with you through equivalent units of production just so you all understand how to compute it. And then the last step of calculating weighted average method is to assign and reconcile costs. So let's go through these 4 steps together. And again, I'm going to spend a little bit of time on equivalent units of production and cost per equivalent unit of production, just so you understand how those are calculated. So the first step, determine the physical flow of units. So let's stick with our making chocolate example. And I want you to, again, think about how the process works. The cocoa bean is actually not cocoa bean at all. It actually starts as a fruit. And then we extract the beans and then we roast them in the second step, right? So in the second step, we're roasting the beans. So we take the raw materials and we put them into work in process at its first department, which is the roasting department. And then, of course, it goes from the roasting department to the mixing department, and then ultimately to finished goods. So that's the physical flow of the cost. But how do we calculate the physical flow? So take a look at this diagram here, and I'm going to walk you through this. In this example, we have production data in units at its first process, which is the roasting department. On the left side, you'll notice that we compute the 120,000 total units based on a beginning work in process inventory balance of 30,000, and we add that 30,000 to the units started during the accounting period of 90,000. Okay. In other words, on April 1st, I started with 90,000 units. Before April 1st, I already had 30,000 in beginning work in process inventory. So in other words, I need to add together my total work in process inventory, which is 120,000 units. On the right side of this diagram, we need to what we call reconcile or match, according to the matching principle, the 120,000 units which have been accounted for at the beginning work in process inventory. And the way we do that is we take that original 120,000, we subtract out what we call units completed and transferred. Units completed and transferred represents the totally completed units, meaning finished goods, that have been transferred out of work in process to finished goods. Okay. And that 100,000 we're subtracting from the 120, which gives us the ending work in process inventory of 20,000. This process of reconciliation helps us to ensure that our physical flow of units balances out. You see? Physical flow of units helps us to understand that the beginning units in process of those started equals the ending units plus those completed and transferred out. Yeah, shows us a way to balance the two. So number one, we determine the physical flow of units. The second step is to calculate the equivalent units of production. Okay, this is where it gets complicated, so I'm going to take my time in explaining this process to you. Equivalent units of production is the number of whole units that could have been started and completed given the costs incurred during the period. You see, in other words, when the month of April started and when the month of April ended, how many units could have I completed during that month? Yeah, that's what we call an equivalent units of production. But the key words here are number of whole units that could have been started and completed given the costs incurred for the period. Could have been. You see, because it's not always going to be the case that what you start with is what you're going to end with. The reason why we do equivalent units of production is because some units are not finished at the end of the month, end of the accounting period, but they still need to be assigned costs. Like here we are, for example. I started the month of April with 30,000 units. March 31, beginning balance, 30,000 units. I started processing an additional 90,000 units during the month. I completed and transferred out 100,000 units before the end of April, which leaves me a balance of 20,000 units at the end of April. I still need to attribute cost to that 20,000 units that I didn't finish during the month of April. You see? So remember, beginning balance plus what we started minus what we completed and transferred out equals ending work in process inventory. Okay, so again, the reason why we calculate equivalent units of production is because some units we did not finish during the accounting period, but we still need to assign them costs. I didn't finish 20,000 units, so I need to assign cost to those 20,000 units. Okay. You'll also notice down below the percentages. Direct materials is 100% across the board. The reason for that is because I've accounted for materials at each department or each step of the process. You'll notice that there's another one called conversion costs. These percentages are needed to, of course, to compute the equivalent units of production for both the roasting and blending departments work in process. This includes direct materials that started production at the beginning of the process, while the conversion costs occur throughout each department's processing. Let me explain to you conversion costs. Conversion costs consist of the direct labor and applied factory overhead. We call these conversion costs because they are costs of converting raw materials into finished goods. Remember, we talked about conversion costs back in, that was like 2 weeks ago, I think. I think it was 2 weeks ago we started talking about the different types of costs, remember? And one of those was conversion costs. It's the cost of converting raw materials into finished goods by using direct labor and applied factory overhead. Okay. Now, what these percentages of conversion costs represent is the percent conversion costs applied at each department. Okay. For example, the 65% is complete for a conversion cost because we had 100% for direct materials. Ending work in process is 100%, but for direct materials, it's only 25% for conversion. The units completed and transferred out are 100% because we've applied direct materials, direct labor factor at 100%. It means they're done, right? We separately compute equivalent units of production for direct materials and conversion costs. You see direct materials at the top, conversion costs at the bottom. We do that separately because conversion costs typically enter the process at different rates. Okay. So let me break it down even further by helping you to understand the computation. The computation formula for equivalent units of production is equivalent units completed and transferred out plus equivalent units in ending work in process. Taking a look at the example from below, completed units and transferred out were 100,000. We take that 100,000 to find the equivalent units of production. You'll notice that it's the 100,000 times the percentage. 100% is 100,000, right? Then we take the ending work in process. For direct materials, ending work in process was 20,000 units at 100%, because remember, that's at the direct materials. Direct materials we know is at 100%. 20,000 times 100% is 20,000, giving us equivalent units of production for direct materials of 120,000 equivalent units of production. This is where it gets tricky, is on the conversion cost side. Remember, conversion costs represent the direct labor plus the applied factory overhead. Okay. The 100% conversion cost is completed and transferred out. When it's completed and transferred out, it means it's done. We've already applied the direct materials and, the direct labor and the factory overhead. So that 100%, that would be 100,000 units. But remember, at the ending work in process stage, we had 25% complete. So we take the 20,000 units in ending work in process times 25%, which means we have 5,000 units in ending work in process identified as equivalent units of production. So we add the 100,000 completed and transferred out plus the equivalent units in ending work in process together to get 105,000 equivalent units of production for conversion within the roasting department. Questions? Does this make sense, this computation? Are you having any trouble with it? Really? You're all good? You sure? Okay, I trust you. It's probably the most complex part of today's discussion. That's why I want to make sure that you understood it. Let's move on to the next part, which is step 3, computing the cost per equivalent unit. Again, it's relatively challenging to understand, but cost per equivalent unit, to compute it, we add costs for the beginning work in process, add it to the period, and then we divide by the equivalent units of production that we got from step 2. Okay, here's how it works. Taking a look at the data, we take beginning cost of beginning work in process plus costs added during the period equal our total costs. We divide this total cost by the equivalent units of production to get the equivalent cost per unit of production. For direct materials, our equivalent units of production is $3. We took the $360,000 of total cost divided by equivalent units of production for direct materials equals $3 per unit. Then, of course, we have conversion costs. Remember, the conversion costs are equivalent to the direct labor plus the applied factory overhead. We have costs beginning work in process plus costs added during the period equals total cost of $485,100 divided by 105,000 units of equivalent units of production. This gives us conversion costs of $4.62 per unit. Okay, and of course we would add the two together to get the total equivalent cost per unit. Good so far, right? Okay, just making sure. Now it gets a little tricky. Okay, the fourth step in the process is to assign and reconcile costs. We again use the data that we got from the prior two steps, the equivalent units of production and the cost per equivalent unit. What we do is we take the equivalent units of production, we multiply that by the cost per equivalent unit to get the total cost. We do that for direct materials, and then we do that for our conversion costs. We do it for both completed and transferred out and ending work in process inventory. The reason why we go through reconciliation is for management's ability to be able to verify the total costs assigned to the units completed and transferred out, plus the cost of units in ending work in process inventory. Of course, it shows the total costs accounted for in the production costs. Okay. So, what kind of information do we get by using process cost? We use this information for a couple of different reasons. One, of course, is to control costs. The department needs to be able to control their costs by comparing it to prior months. If the materials conversion costs have changed a lot, management's going to be wondering what's going on and need to take corrective action. It's important to be able to control your costs. The second reason why process cost information is used is to, of course, evaluate the performance of management within each department. How well is the manager of that department controlling their costs? In addition, of course, controlling costs, one of management's responsibilities for each department is to budget. The third reason, of course, is to evaluate process improvements. Your organization can use this type of information to make better decisions or to execute on the process more efficiently. Maybe making some minor modifications to the process. And of course, one of the more important reasons to use process cost information is to prepare financial statements. Got to figure out what the cost of goods sold is and ending inventory amounts based off of the process cost data. These, of course, as you know, are reported on the income statement and balance sheet, respectively. Cost of goods sold on your income statement, ending inventory on your balance sheet. Yeah. So that's why process cost information is so important. Earlier, I had mentioned that it's really important to use weighted average uh, for this process, for process costing, because we use it to prepare what we call a production cost report. I'm going to show you what this looks like. A production cost report is a summary of the production costs. And the way that we complete this process cost report is in 4 steps. Step 1, as you know, is the physical flow of units. The physical flow of units reconciles the beginning units in process and those started during the accounting period and ending units in process that have been completed and transferred out. The physical flow of units. That was the first step. This process cost report shows us this. The second, of course, is the equivalent units of production for direct materials and for conversion costs, just as we did before. The third part of this process cost report is the cost per equivalent unit of production for direct materials and conversion costs. And the fourth step is to assign total costs among units worked during the period, which are, of course, shown here. So 3, step 4. You'll notice that this 762,000 represents the total cost of the 100,000 units transferred out of the roasting department and into the blending department. Remember, completed and transferred out to the next department. The 83,100 represents the cost of the 20,000 partially completed units at the end of the accounting period. Right? It's the ending work in process within the roasting department. And of course, this 845,100 represents the total cost charged to the roasting department. Yep, represents total cost. So, yeah, that's the process. It's again very important that you work hard to understand equivalent units of production. So again, everything comes back to the physical flow. The physical flow for process costing follows the physical flow. What I mean by that is as the product flows through the production process, we're adding in additional direct materials, direct labor, and factory overhead in each department as the physical flow of materials moves through each department. Okay. We do this, of course, in steps. First is raw materials, and of course, we're adding in which become direct materials, goes into the first department, which is roasting. We apply direct labor. We apply factory overhead. And then we do the same thing in the next department. As the product moves through each department, it keeps accumulating direct materials, direct labor, factory overhead until it reaches finished goods. And then, of course, when it's sold, it becomes cost of goods sold. You see, this just is a nice representation as a flow chart following the physical flow of the product. So here we have the same data that we've seen before. We have our two different departments that represent the following information. End of March, we had raw materials inventory of 100,000. Within work in process, we had 180,000, 189,900 in roasting, 151 in the blending department. During the month, we purchased 400,000 materials. It also says on credit. That means accounts payable, right? We used during the month of April 279,000 direct materials for the roasting department, 102,000 units for the blending department. We also used 71,250 indirect materials. Indirect materials, as you know, is part of factory overhead. We had direct labor for the roasting department, 171,000. For blending, it was 183,000. And we had indirect labor, as you know, part of factory overhead. Then we had other factory overhead things like insurance expense, utilities, depreciation, and other. It is so important that we recall how to make the journal entries for these, because these journal entries help us to track the overall costs in our accounting information system. So the first transaction here, of course, is we purchase some raw materials. So debit raw materials, credit accounts payable. We then need to record the use of the raw materials inventory. So this would be, of course, an adjusting entry. Debit work in process inventory for the roasting department. Debit work in process inventory for the blending department. Credit raw materials inventory. Then, of course, we need to add in all the factory overhead. So we debit factory overhead, credit raw materials inventory. This is for the indirect materials used. Then we have our labor, got to add in our labor. Debit work in process inventory roasting, debit work in process inventory blending, credit factory wages payable. We have our indirect labor, debit factory overhead, credit factory wages payable. And then, of course, we have our additional factory overhead, insurance, utilities, looks like we paid some stuff, depreciation, etc. So we debit factory overhead and we credit all of those accounts. We let's see here. We then, of course, need to apply that factory overhead to each department. And the way we do that is through the predetermined overhead rate. Remember, we talked about predetermined factory overhead rate some time ago, and that was when the company makes a predetermination of the overhead based off of an activity base, such as direct labor. So in this case, it's 120% of direct labor. We apply that to each department. And that's how we transfer, or I'm sorry, apply factory overhead to each department. And then as the process moves, we of course transfer that cost as the product moves from one department to another. And so let me show you what that physical flow looks like. So as the cocoa beans are done being roasted, they then need to be transferred to the blending department. And of course, the way to do that is through adjusting entry, debit work in process blending, credit work in process roasting. This transfers out the completed units. And you'll notice what's going on with the T account below, what that transfer looks like. A nice visual representation. And then as the blending is complete, we need to move the now finished product out of work in process and into finished goods. So we debit finished goods inventory and credit work in process inventory for blending. You'll notice that the work in process inventory for blending and the finished goods inventory is representative of the total cost of goods manufactured. Right? And you remember that formula from 2 weeks ago. And then when we sell the product, comes out of work in process. I'm sorry, it comes out of finished goods inventory and onto our income statement as cost of goods sold. So as I sell it, I debit accounts receivable or cash, depending on how the customer's paying us, and I credit sales to represent record of my sales. Debit cost of goods sold, credit finished goods inventory. You'll see the cost of goods sold. The way to calculate that, of course, we take our beginning finished goods inventory plus cost of goods manufactured equals cost of goods available for sale minus ending finished goods inventory equals cost of goods sold. And this is what it looks like on our income statement and balance sheet. On our income statement, we have our sales minus cost of goods sold equals gross profit. On our balance sheet, we have our balances for raw materials, work in process, and finished goods. You'll also notice we have a formula here at the bottom for what we call cost per completed unit. The cost per completed unit is the total cost per unit. Yeah? So we take the cost of goods manufactured during the period divided by the number of units transferred to finished goods. That gives us a cost per completed unit. For this example, $13.02. A little bit more about process costing. As I mentioned, process costing depends on the type of operation that the business is in. For example, Coca-Cola and Pepsi focusing on soft drinks and water and things like that. It's a homogeneous process. Meaning it's the same product over and over again, high volume, etc. The current trends in work in process are things like process design, product design, robotics and automation. There's a lot of that in factories today. It's a continuous process, meaning it can operate 24/7. There are services now, customer orientation, and what we call just-in-time production, which is hard to do in process, but it is something that they're getting better at. Just as a reminder, just-in-time production is where um, they receive a request from a customer, says, "Hey, I need a batch of this product immediately." So they call it just-in-time production. It's a growing trend in process costing. The reality is, there's no perfect system. The majority of companies that uh, produce products usually use a combination of both job order costing and process costing. We call this a hybrid cost system, okay, where we use both. So we're using a job order cost system and a process cost system. We call this a hybrid. It requires both systems to work together, right? Some companies tried to standardize the process, but with by also meeting the customer's requests through this joint system. It's kind of like an example of this would be Coca-Cola has a large grocery store customer that has requested a special batch of Coca-Cola where the label has the company's name on it, right? It has the grocery store's name on it. They would use a hybrid costing system for that. Yep. Just kind of show you why it would exist, why it's used. Here we have a hybrid cost system example. In this example, we're looking at the assembly process to build a car. A car costs $22,600 per car to produce, depending on, of course, any type of customizations that the customer is looking for. If a customer decides they want a different wheel type, there's a package for those. Sound systems, there's a package for those. So the customer selects, based off of their overall desired needs. So we would use a hybrid system for this. There's the standard part or the process part is the vehicle. The job order part comes into play when the customer decides what they want: special wheels, special sound system, whatever. But that just gives you an idea of what that looks like. I will tell you that Ford and General Motors use hybrid cost systems. So we talked about weighted average from the perspective of figuring out equivalent units of production. Some companies might decide to use first in, first out as their chosen cost system. And so you can use first in, first out method using 4 specific steps. And you'll see that they're very similar. Figure out the physical flow of the units, compute equivalent units of production.
Look what it says.
Jen, you okay? Good. Compute equivalent units of production and assign and reconcile the costs. Now, using first in, first out, that means the first units to come in are the first units to go out. First in, first out, right? Just like we learned about principles of accounting 1. Now, using the first in, first out method for computing equivalent units of production follows that same process. So step 1, of course, is to understand the physical flow of the units. And so here we have an example: 30,000 beginning work in process inventory plus 90,000 started during the period, as you know, is 120. The units completed and transferred out are 100, and ending work in process is 20. We take the units completed and transferred out minus the beginning work in process inventory to get 70, which is the units started and completed. Units started and completed, of course, is used in first in, first out, because as the name implies, we're going to use whatever we have minus what we started, what we already had started before, yep, the 30,000. So following the same process, step one, follow the physical flow of units, beginning work in process, plus units started and completed during the month, that's 120,000. Oh, I'm sorry, yeah, plus the ending work in process, so altogether 120. Starts units started and completed is 70, beginning work in process, plus ending work in process is 20, giving us 120. The second step, of course, is to compute the equivalent units of production. The formula here, of course, is the number of units needed to complete the beginning work in process plus number of whole units started, completed, and transferred out, plus the number of units, equivalent units in ending work in process. Now remember, for direct materials, it's the amount of materials used. Remember, direct materials, that is one of what we call the primary cost. The conversion cost is where we take the direct labor plus the factory overhead. That's what we call conversion cost. It's a cost of converting raw materials into finished goods. We cost of labor plus overhead. So you'll notice that the conversion cost of beginning work in process inventory is 65%. Started completed, of course, it's going to be 100. And ending work in process is 25. Just as before, we would take the number of units times the percentage. For direct materials, number of units times the percentage. And for direct materials, we have 90,000 equivalent units of production. In this example, beginning work in process was at 35% times the number of units, 30,000, gets us to 10,500. Started and completed, of course, is going to be 100%, 70,000. And 25% is going to be the ending work in process. So 20 times 25% is 5,000, giving us total conversion equivalent units of production of 85,500. Now you'll notice, of course, with this being first in, first out, the application, the total production cost is 845,100, which is different from the weighted average. Yep. So to find the cost per unit for direct materials, it's the cost added during the period divided by the equivalent units of production from step 2. It's just $3.10 for direct materials per unit. We follow that same process, and our conversion cost per unit is $4.40. That, of course, gives us a total product cost per unit of $7.50. And then the fourth step is to assign and reconcile those costs, just as we have done for the weighted average. Equivalent units times the cost gets us total cost. Okay, my friends, we made it to the end of our discussion on process costing. Because of the complexity of equivalent units of production, I want you to focus on that part because it's usually the most difficult part for students to understand. Are there any comments, questions, or concerns that you have about process costing? Y'all sure? You're really sure? Positive. You think you got it, Shanti? Okay, well, that's good. That's good. Yeah, it's kind of difficult to get, but that's why I wanted to make sure I took my time explaining, equivalent units of production the best that I could because it's complex. Um, Remember, when you see the conversion costs and conversion percentages, it's the cost of converting it from raw materials to finished goods. And the conversion costs, as you recall from 2 or 3 weeks ago, is the direct labor plus factory overhead. Once you understand that part, it makes more sense, right? That's why the total completed and transferred out is 100%. Well, of course it is because we applied 100% of the direct labor and factory overhead. But you'll notice that those other stages are at different percentages. So that's the part that I want you to try your best to understand. Yeah. Anything else? Any comments, questions, concerns about anything? Okay, just as a reminder, I would like you to use the class time on Wednesday to complete your hypothesis, one original, one response to a classmate, and the chapter 20 quiz. Those are your 2 action items for the week. Use the class time on Wednesday to do those just because it gives you time. Yeah. Spread the week out. You know how it is. I don't want you to get stressed out about nothing. You know what I mean? Get your best interest at heart. You know that.
Absolutely.
Hey, I got you. You know I do. Ashanti, have I ever let you down? I mean, you and I have known each other for a couple of years now. Ever
No,
let you
you
down?
have not.
Okay, and I never
I
will. You know that.
appreciate that.
Yeah, yeah. I'll never let you down. You know that. All right, awesome. Thank you all so much for your time today. I sincerely appreciate all of you and your hard work. Keep it up. I know you'll all do great. If you ever need anything, you can email me, call me, set up office hours. Whatever you need, I'm always here for you. You know that. And thank you all so much again for your time. Appreciate you. Stay safe,
Thank you,
wash your hands.
Professor.
Thanks, Tom. Appreciate you. Take care.
Good
Bye-bye.
night, Professor.
Thank you so
Thank you,
much.
Professor.
Take care. Appreciate you.
Bye bye.
Bye-bye.